Is this just the beginning, or is this a dead cat bounce for Bitcoin? Oh man, so Bitcoin continues its impulsive move, trying this weekend to break through $24,000. Is this move sustainable? That is the question on everybody's mind. Or are we running into a critical dead cat bounce? In this video, I'm going to analyze the various timeframes to share with you if I think there is a huge risk of us being sent back down. I'm also going to be sharing with you my different price targets, plus my thoughts on if we have truly bottomed out and what that means from a long-term perspective. Make sure you smash the likes, don't forget to subscribe. Let's jump straight into the charts. Really positive weekend for Bitcoin continues here on the hourly chart. We had our period of consolidation. We fell down after the DOJ FUD, built ourselves back up, pushed through 22,000, pushed again up to 23.5, and then we faced a little bit of resistance. So really positive set of days here on Bitcoin, and it has the bears wondering, when is this going to stop? And this is the beauty of and struggle of crypto, and I tweeted to this effect. Crypto has a knack of creating perma bears. Every time you have a bear market, a new group of perma bears are created. And these are people who are once really ambitious, believed in crypto, but once they live for a bear market, they just get it beaten out of them. They become exhausted. They always think the market is going to go down because the muscle memory tells them that. Right? We had a horrible year last year. I was talking about this with our Discord community, which, if by the way you're not there, make sure you're there. Links in the description, ijaz.uk/Discord. It's free. Talk to us, have a chat with like-minded people. But I was saying that a bear market, and if you look particularly at 2022, the worst financial year in 14 years, Russia-Ukraine conflict, 3 Arrows Capital, Terra Luna, FTX, Celsius, Voyager, BlockFi, right? China pandemic issues continued, inflation out of control, monetary policy tightening for the first time in a very long time at a rapid rate. What a horrible year. And you can imagine why that has created a subset of people who are really bitter in the market. The message I urge all of you guys is don't let your emotions take over. Always be data-led. It's easier to say than do, I know, right? But you've got to practice this. I've been lucky enough that I've been trading for many years now, and I've almost been able to detach myself from the emotions. But still then I have to remind myself, and you guys will need to too. And similarly to the other side, right? When you have a bull market, everybody thinks the price is only ever going to go up, and you'll see that phenomenon start to play out in the next bull cycle as well. You'll get these perma bulls who always tell you the price is going to go up all the way to $1 million. You've got to be able to wash out that noise, wash out the noise of the people saying this is just going to collapse all the way back down to 10K. We heard that before. Wash out the people that are saying this is running straight to $1 million. Be pragmatic, find the right data sources, find the right people you can trust that you can learn from, and that's the best way to navigate this. So you can see that there on the hourly chart. And if we flip across to the pattern which I was sharing with you, we formed this bullish consolidation. Obviously, we fell out and invalidated the pattern. That was based on the DOJ FUD, which we did not need that day. And then we quickly built that strength back up, reset the RSI, and managed to get a nice breakout and ultimately met the initial price target, which is what we set, at around that 23,400 range perfectly. And you can see the bears started stepping in a little bit just to create a little bit of pressure. What are the retracement levels? Well, the first and foremost level is this level here, right? I'd expect at least the top of the channel, the bears should be able to do that. Failing that, you'd want to extend this line and come a little bit further down here, right? Maybe get into this kind of a range at 22. Now remember, 22 is an important level. That 22 level is this line at the top of our channel, okay? So can it come back down here at the top of our channel and test at 22? Those are the immediate levels that the bears will have to make sure they push Bitcoin down to test. If I bring out the EMA ribbon, you'll also see why that's important. Here on the hourly, you can see that they would need to push us down to flip our hourly ribbon bearish, but more importantly, look at the 4 hourly chart, right? The bears will have to push us down into this EMA ribbon. From a bull's perspective, that is no worries whatsoever. We can even come down to 20,000 here, which is the previous bull cycle high, okay? December 2017, that was the previous high. We can come down, test that level, and get a nice, even more powerful bounce. I'm happy with that. I don't like just parabolic moves like this. I like consolidations, and I want to see more of a consolidation, even if it's just sideways like this from Bitcoin. I would love to see that on the Bitcoin chart. Do we see that consolidation down to some sort of level? Whether it's at the highest level here, which is at this 22.5, sorry, or if it wants to come down to 22 flat, or 20, they're all absolutely fine for me on the longer term trend, because ultimately we need to consolidate. These pumps are fun and we can enjoy them, but the reality is we'll be less scared of pullbacks and major pullbacks if we can make sure we consolidate as we're going along. The best way to think about this is you want to bank your cash as and when you go along, right? As the price moves in, build some scaffolding. Move a little bit, build some scaffolding. Move a little bit, build some scaffolding. So that's really, really important. That is that a lot of people are starting to speculate whether we can now create some FOMO in the market and just start running towards all-time highs. And let's just put this into perspective. And I did this exercise for you guys as we were in our painful period last year. And I thought it would be useful for you guys to see it again. This is the previous cycle. Now, in the previous cycle, around that December 17 figure, 2017 point, we ran to our highs of around 20,000. And what you notice then is over the subsequent 371 days, okay, 53 weeks, we moved sideways, ultimately ending up with our bottom around that 3,000 mark here on this weekly candlestick around December 2018. So all of 2018 was a complete bear market. We know that, okay? And that's what a lot of people are now comparing to our existing cycle, which is if you run it from here, which is when we ran to 69,000 in November 2021, 364 days, and they're calling this a bottom now, which is what we hit in November, okay? So they're saying that was our bear market throughout that period, and it equals a similar amount of time, right? So 364 days versus 371 days. Fine, I can accept that. But what people are failing to notice is what happened thereafter. And that's where people are starting to create a little bit of FOMO in their own brain. Yes, we've seen some pumpability there on Bitcoin, right? We're respecting the pump. If you've not seen my video from yesterday, watch that. We're respecting the pump. But at the same time, we need to understand what happened. And look at this. From the moment we formed that bottom, if you progress from December 2018 and you progress all the way here to this candlestick on March 2020, very long period of time, you can see that in that whole period of time, we made very little progress. You're still at $4,000 at this point, okay? So let's just play that out, guys. From where we're at here, all the way up to here. So 448 days, over a year, okay? 64 weeks. So after 64 weeks, you've barely moved, okay, on Bitcoin. It feels like you have because you didn't create your bottom. You even ran as high as 13,000 in that period. So just play this out for me a second, guys. Look at this. Look at this. You started from your tops at 20,000. You spent a year of bear market ending at around 3K. You run up to 13K. Everybody thinks this is it. We are running back. This is equivalent of now Bitcoin getting to about 45K, right? Roughly speaking. It's like us just getting back to 45K. And everybody is calling for the next bull market. Everybody's positioning themselves. Everybody's getting excited. Then what did we see? Well, if you progress by this point, which is a year and a half almost since the bottom was in, which was actually the official bottom, you are now still sitting close to the bottom at 4,000 back again. So from 13 back down to 4,000. So a lot of people are going to get shaken out in this volatility. So all of this to say that once we formed what in hindsight was the bottom here in December 2018, it took us up to April 2021 to form our next major bull cycle, right? Which culminated in us hitting that 64,000 in April 2021. So you're talking 847 days. Now, if you wanted to be smart to say, okay, when did the actual move start? Well, technically, you can say you wanted to be in just here. After that week where you got in at 4,000, if you bought in at this week at 4,000, that would have been the great point, right? So because this would have felt like the bottom, but you had all of this time avoiding the peaks here at 13,000 to DCA and ultimately up to this point. So you had another 448 days after your year of bear market, okay? So you had a year of bear market, which is what we've just had. Then you had another 448 days before you got the green light here, and then the madness ensued, which took Bitcoin from 4,000 up to 64,000. That is the bull cycle, right? This is your bear market. This is your kind of fake bull market, consolidation again, and then takeoff. So let's play that out where we are, right? Let's play that out where we are. We've just had our year of downside, and now 847 days, our next peak would arguably be our equivalent of that 64,000. So our next peak will be around that March 2025 time, assuming history rhymes, right? So I just wanted to put that out there because there's a lot of people out here that are saying, oh my God, this is so exciting. We're going to go straight to the moon right now. The reality is you've got to study the cycles. Whilst this bottom could be in, that could be the lowest, 15,500. And I have a lot of reasons to think why that should be the bottom. I just explained at the beginning of this video. The macro landscape has hugely changed. Bitcoin has coped with some of the biggest things you could expect for Bitcoin to cope with. From the likes of Free Hours Capital, to Terra Luna, to Celsius, to Voyager, to FTX Collapse, to DCG and Genesis now filing bankruptcy. These are huge, huge challenges which Bitcoin has weathered and is already launching an assault at the 24,000 level mark as if we were never sitting at 15,500 a little while ago. On top of that, you've got the macro trend really improving with inflation starting to see meaningful insights to the downside. But my message here is this is not over. Enjoy the pump. Understand it. Understand where we're at. But this could still be a bear market rally. And that is why I'm going to jump into the charts now and share with you exactly what the risks are. Because right now, I want to be devil's advocate for you guys. When the market was really bearish, what was I trying to do? I'm trying to remind you guys of why we need to be bullish, why we need to be DCAing, and why we need to keep our head in the game, right? Don't get shook out. Now the market's full of cream and euphoria and everybody's super excited. I want to give you guys the other side, right? I gain no value. I can get more views if I put this video as we're going to $100,000 right now on Bitcoin. But I've got to respect the fact that, guys, this could be a bear market rally and we have to be prepared for it. So I'm always going to give you the other side of the argument. And what we're sitting on here now is the weekly chart. And I've put it on the log chart because sometimes it's useful to use the log chart. So if you guys aren't familiar with that, on TradingView, you can click the log chart just behind where my picture is. You can't see it there. The log button is there. Okay. Now, what is this? We're forming this falling wedge pattern, a huge, horrible falling wedge pattern on Bitcoin, which remember is a bullish pattern, right? When you break to the upside of this, you get a price target at least at the top of the wedge, which gets you back to that 69,000 level on Bitcoin. But what are you noticing? And it's glaringly obvious is we just had a powerful few weeks which run us into the top of the channel. And this is where the worries of a dead cat bounce can start to occur. For those who aren't familiar, a dead cat bounce is when you're in a bearish situation where price action is moving to the downside for a very long period of time, like we've seen on Bitcoin, right? Big move to the downside of the weekly time frame. But then you get this. You get a move to the upside that gets everybody excited. And this is what we're in right now. We've had a big move from a bottom, you formed a bottom, and you're moving to the upside. But sometimes, and no cats were harmed in the making of this video, guys, you get a dead cat bounce, which is where this was just showing a little bit of life, right? Where it just bounces back up a little bit before, boom, being thrown back down. There was no life in that bounce. It was already dead, so they say, right? In the saying. So it's falling, just bounce off the concrete, but it was already dead and it's going to keep falling. And that's what the dead cat bounce scenario is. So if we come back into the charts, that's the fear that some people have right now, is we've had this move to the downside, we've consolidated. Is that just hanging up there to then ultimately be thrown back down to the downside? Conversely to that, why don't we think about the positive scenario? What if we do get a break here from the weekly? If we can get a high volume break, and by the way, the volume has been serious the last couple of weeks. This is good volume here, happy with that. That is like Burj Khalifa skyscraper volume, that's good. But if we can get a breakout here and a retest and start working our way up, that is where the true move starts, and that's where things can start to get exciting. Now, more importantly, what I want to see, even if we don't get this bullish scenario play out, I want to see us break this structure and move sideways, right? Remember what I just shared with you, 400 plus days of moving to the side, right? So ultimately, what we don't want to do is do this, because that shows we're still in the bear market and we're still moving to the downside. Of the two scenarios, I'd rather obviously this go to the moon, but even breaking the structure, moving sideways, that is great. But the dead cat bounce risk is still there until we nullify this pattern. Very, very important. Similarly, on the weekly chart here, just wanting to, make sure we're zoomed out and looking at the longer time frame. What are we doing? We've been speaking about this for a long time. We're running into our weekly EMA ribbon. This is a critical moment for Bitcoin. Bitcoin has shown real good strength, but remember, this is an easier move compared to what you're facing now. Think of an analogy of somebody who's hugely overweight trying to lose weight, right? The first few pounds they lose is going to be really easy, but it doesn't mean they can sustain that momentum. You will hit a brick wall as you get to a certain level, and that's the same on Bitcoin right now. You're running into the EMA ribbon. This means business. If you really want to break this level and turn what has been a very long, year-long downtrend back into a sideways or bullish trend, you're going to have to do some work. You're going to have to get above 26,000 roughly here on the weekly time frame. And you can already see 24,000 is giving us a little bit of resistance, but if we can break through that, we've got to get to 26 and get a weekly candle close above this level. Okay, that's what we're looking out for here. That's what's going to be important here. But the bears will try to step up, just like they did here. They waited till the last minute, but they did step up and throw us back down to the downside. Don't forget, on top of that, any news pieces can come out, right? The macroeconomy can take a turn, anything can happen. So even if you got all the technical analysis right, you've got to marry it up with the fundamentals, because something can happen with the macroeconomy, something can happen with another bankruptcy in crypto, there could be another scam, there could be a hack, and that's why it's so challenging and why you've got to be very, very careful in this market. Let's also, like I shared yesterday, bring up the Bollinger Band. You can see with the Bollinger Band, we're still challenging the top of this Bollinger Band. Once we get a weekly candle break above this Bollinger Band, things will get a lot more exciting. But remember, the top of the Bollinger Band tends to act like resistance. Look at this huge move here, right? We had our huge move here on the Bollinger Band from June 2021. We ran from here, which is in the 28,000 range, all the way up to 69, only to hit the top of our Bollinger Band and get sent all the way rocketing downwards. So we have to respect this Bollinger Band, but at the same time, if we can get a good volume break, we can change this trend. And that's what this is all about. We need to, at some point, change this trend, and ideally into a sideways trend before trying to work on our next upward trend to the upside. Let's bring out the VPVR. VPVR, you can see we're at a point of control, that red line, huge volume being traded here. This is a tough level, right? A lot of resistance ahead. But once we clear around that 24,500 mark, things should become a little bit easier to get to that 26 level. Then we can flip our weekly EMA ribbon bullish. Quick check-in on the dollar index, and it's another weekly red candlestick, another feather in our caps. We've done well. We've kept risk rotating on, albeit slightly this week. You can see it was a bit of a tug of war candle here with high topping tails and wicks. If you don't know what this means, ijaz.uk/TA. We analyze these candles. When we look at these candles, the amateur just sees red and green candles. For somebody who's experienced at TA, there's a whole bunch of questions it tells you and answers, right? This candle with this huge wick is very different from this one. This tells me an amazing story, as does this one, as does this one. If you don't know what doji candles are, if you don't know what dragonfly candles are, if you don't know what all these things are, shooting stars, you've got to check out the free TA course, ijaz.uk/TA. We're in a complicated moment right now where Bitcoin is showing a lot of impulsive movement to the upside, but it's important that we hold our nerve. We enjoy the pumps, we trade them, and we benefit from them. In terms of our long-term bags, I'm certainly not somebody who is chasing the pump right now in terms of my long-term bag. When I see this kind of price action, I'm not DCAing. I sit back, I wait for the pullback. If we do get that dead cat bounce eventuality, we get rejected from that weekly trend line, I will then start loading my long-term bags. But in the short term, I'm looking for structures in the charts. I'm looking for patterns like that pattern we saw with the bullish continuation pattern to trade and benefit from the volatility. One thing is for sure, the volatility which is going to come this year is going to be insane. The market is going to have moments where it's just really confused. So if you think this is just going to be a really positive year, you might want to recheck that prediction, because one thing is for sure, there's a lot of unknowns. Okay, there's a lot of unknowns in the macroeconomy. One macroeconomic piece of data can send jitters down the markets. So could an earnings report. So could something happening out of Russia, Ukraine. So could something happening over in China. These things can cause problems for us as investors. So we need to understand what that means for our long-term portfolio, and also that it's going to bring a lot of volatility. That volatility could be a problem, but it can also be an opportunity if you know how to position yourselves to benefit from the crazy green days. These 7, 8, 9, 10% days on Bitcoin just on spot will become a lot more common this year, particularly than it was last year. Hope you guys enjoyed this video. If you appreciate this type of content, smash on likes. Don't forget to subscribe. As always, check out the links in the description, and I'll see you in the next one.